let's invite the management of Nitin Spinners on the show now. They've reported a weak set of numbers. The gross margins have taken a hit. Dinesh Nolkha, the managing director of Nitin Spinners, is now with us on the show. Mr. Nolkha, my first question is on the gross margins. They've declined a fair bit. Do you see them normalizing, and if yes, when, and what will drive that?
Thank you for having me on the show. As we can see, the margins were pretty good in the last financial year. We had a margins around 23-24% operating margins, which has come down to about 15.5% during this current quarter. The prime reason was the volatility in the cotton prices. We have seen a lot of volatility. Prices first going up very sharply and then coming down. And then there was a steep disparity between Indian cotton prices and the international prices. So that has actually led to a lot of margin erosion for us. So we hope that we have, in the meantime, in the last 2 or 3 months, we have seen that international prices have come down substantially. And whereas Indian cotton prices have not come down that substantially. If you see, the international cotton prices have come down by 35%, whereas Indian cotton prices are down only 15%. With the new crop coming in from October onwards, we expect that both the parity between the Indian cotton prices and the international prices will be achieved. So accordingly, then the margin should come back to the normal levels.
Mr. Nolkha, good afternoon. Well, that is what my question was going to be. There is a disparity. In fact, the Gujarat Spinning Association had written a letter where they said that because of this disparity in international and domestic prices, they are seeing cash losses as well in their spinning segment. By when do you expect it to ease out? What is the difference between the two prices, that is international and domestic? And considering that you say that it will stabilize in, say, second half, what kind of margin picture are you looking at for your own company?
Normally, once this margin stabilizes, once this prices stabilizes, the normal margins in the spinning industry are in the range of 16 to 20%, depending on the kind of product mix you are having. So we have been continuously stating that this is the margin which is more sustainable going forward. So accordingly, we expect by November onwards, once the new crop comes in full flow after Diwali, we expect that the cotton prices will normalize. And accordingly, the yarn prices will also settle down accordingly, and we should see a normal second half.
Just a bookkeeping question. What is the current difference between the international and the domestic prices of cotton?
As of today, we are seeing that the New York futures, which is about 113 cents per pound, and the Indian cotton is about 145 cents per pound. So there is a difference of about, let's say, 17 to 18% differences there.
Okay.
So 16 to 18%. Can you talk a little bit about exports? Your exports have taken a hit. What is the ideal mix between domestic and exports that you anticipate for FY23? Which are the markets which are under pressure?
Normally, we have been exporting, if you see for last 4-5 years, we have been exporting nearly 65% of our products and 35% is for domestic market. So in last financial year, the markets internationally was very good and demand was very good, so we could go up to 72% in the last financial year. But that is not the benchmark. We should be considering, given our product mixes, 60-40 ratio, 60% exports and 40% for domestic market. At the moment, we are seeing the retailers all around the world are just withholding their purchases because of this volatility on the cotton prices. The cotton prices have come down substantially. They are feeling that if they buy now, they will be settled with a very high value yarns as well as fabrics, which may dent their margins. So there is a withholding, means the inventory pipeline is getting empty, and we could see the resumption in the orders coming very soon. Plus, apart from this, we are also seeing a lot of inflationary effect coming into Europe, which is one of our major markets. And we are seeing that because of the currency adjustment, and because the euro used to be around 1.10 to 1.15, which is around 1 euro to dollar parity has been achieved. Also, we have seen that prices, because of inflation in Europe, is increasing substantially. So this is maybe readjustment of the prices is also happening there. Plus US, there is a fear of recession which may or may not happen, but the retailers have already slowed down their purchases. Okay. We expect all these things to be normalized in the coming times. The retail sales, as you can see in India, as well as overseas, is happening as it is. But there is a fear psychosis which we have to take care of anyway.
Yeah. So since we are expecting recovery, of course, a lot has happened in the export markets as well. It was around 70% of your FY22 revenues, but now you said 60% is the normalized export contribution that should be. In that case, what is the revenue growth you're expecting just in the export markets in FY23? And overall, what is the revenue guidance that you can give us?
This year, since we are not, we have run for nearly full capacity during the last year, and we will be just adding a very small capacity during this particular year. But still, we expect with our efficiencies, operating efficiencies and other things, we should be able to grow by about 4-5% this year. Going forward, our expansions are on the already on the way. So from FY24 onwards, we should see substantial jump in our revenues. As far as exports is concerned, I think it will be, in fact, very hard to match the last year's export levels because they were very good. We had done more than 1,900 crores of exports last year. So I think we will not be able to reach this level, that level particularly this year.
So if the global retailers are withholding their purchases, are you stuck with a lot of inventory because you're still producing as much as you can? Your capacity utilization is healthy, but you're unable to export it. So what is the inventory level that we're looking at, and is it higher than typical levels?
Definitely, it is higher than the normal times, but we are pushing more in domestic market. Domestic markets are far better than the international market. At this moment, there is a very good demand coming from the domestic market. So that's why we are already focusing more on domestic. At this point of time, the domestic to export ratio is about 50-50. So we have been able to push various products in the Indian markets.
You said in Q1, at least the ratio was 60-40. And you're saying it's going to be 50-50 going ahead in the current quarter?
Yeah, it is. At the moment, it is about 50-50. We aspire to keep it 60-40. That is what it was 70-30 earlier. At the moment, it is running at 50-50. But we aspire to keep it as a balance around 60-40.
Okay. Mr. Nolkha, you said that a small part of your capacity expansion will come on stream this year. Can you tell us when will the entire capacity expansion come on stream? You have it planned in spinning, knitted fabrics and woven fabrics as well, all three of the segments. By when will it come on stream? How much revenue addition do you expect from there? And do you ever think of forward integration, getting into garmenting as well, because you are there across the value chain already?
First of all, our expansions plans will start to kick in from the last quarter of this financial year. We have our weaving and knitting and processing expansions will be on stream within this last quarter of this financial year. Our spinning expansions will be coming in the first half of next financial year. They will be evenly spread. So we expect that we should be able to complete our expansions by September of 23. Further, from this expansion, we are aiming at a revenue growth of about 1,200 crores. So that should fully fructify in the year FY25. Partly, it should be also there in the FY24. Now coming to your question of garmenting, we have not yet, let's say, visualized on that part. We are still focusing on value addition of yarns as well as fabrics. Since we are present in all segments, that is something which we have to ponder about. We have not yet thought about it. Initially, we were thinking to go with some PLI schemes, but they were not in tune with our products and our product mixes. So still, we are yet to decide on that part of the business.